What's up, everybody? My name is Joe Brown. This is the Heresy Financial Show, and today we are going to talk about the signal that will tell you the exact moment you should liquidate 100% of your stocks. Sell it all, dump it all, get out 100%, and not get back in. Ready? Let's dive in. You know that I've long been a proponent of owning stocks, especially specific stocks. Not the entire stock market, but very specific stocks, especially given times of high inflation. When you look at the stock markets and you look at the prices of assets throughout history in countries that have high or hyperinflation, stocks go up. They're volatile, but they go up. Now, do they go up enough to keep pace with inflation in terms of purchasing power? Sometimes yes, sometimes no. However, that's not the point. The point is selling your stocks and going to cash versus keeping your stocks. If the stock price is going up, then by definition, it's doing better than cash because it takes more cash to get those stocks. Whether or not it keeps up with the prices of goods or services or other assets like real estate or gold, that's not what the discussion is about. The discussion is about, are stocks a hedge against inflation, meaning the price goes up, meaning they do better than the cash? The answer to that question is yes. However, there is a point at which you should sell your stocks and not keep them anymore, regardless of what the price does, regardless of how they perform relative to inflation. And that point is the point at which the Federal Reserve starts buying stocks. At that point, you should get out. This is not something that is unprecedented in history. This has happened many times in countries all over the world for hundreds of years. Not only is it not unprecedented in history for something like this to happen, it is not even that big of a large leap from what the Federal Reserve has done before. And so the Federal Reserve at some point, in my opinion, will absolutely start buying stocks. And that is the point at which you need to sell it all. And I'm going to explain exactly why. So first, let me explain why the Federal Reserve will buy stocks. Every single crash when the Federal Reserve tries to, and the government in conjunction with the Federal Reserve, tries to bail out the economy to stop the crash, they have to do everything they did before plus some in order for it to have the desired effect. So that's happened, for decades. In the dot-com bubble burst, they lowered interest rates. And then in the housing crisis, they had to lower interest rates and they had to do TARP. They had to bail out the banks. And then in 2020, not only did they have to lower interest rates and bail out the banks, they had to bail out everybody. They had to bail out all stocks. They had to bail out all companies. They had to bail out people. They had to let people stop paying their mortgages. They had to give people stimulus checks or a trial run of universal basic income. They had to buy not only government debt, but they had to buy corporate debt. And they did that through special purpose vehicles housed at the Treasury because the Federal Reserve is not allowed to own corporate debt on their own balance sheet. And so they basically printed money, gave it to the Treasury, and then the Treasury used that to buy things like corporate bonds, both investment grade and junk bonds. And so we've seen the Federal Reserve and the federal government have to step up and increase the amount of intervention in order to have the desired effect for rescuing the economy. So in the next crash, it won't be enough to do everything they did in 2020. They'll have to do all of that plus more. So instead of stimulus checks, you'll just get universal basic income. It'll probably be rolled out through a central bank digital currency. They'll say, hey, your stimulus checks, you're going to get $1,000 a month. In order to get that, you just have to download the Fed Wallet app. You have to download the Fed Wallet app, and then you can spend it at any business that has a Fed Wallet app as well, Fed Wallet account. And in order to have a business license, you'll have to, as a business, you'll have to download it as well, have an account with the Fed so that you can accept the Fed's money. And so I think universal basic income will be the way that they roll out the central bank digital currency in the next crash. The next thing that they're going to have to do is obviously the same as before, which is buy a bunch of government debt and corporate debt like they did before. But last time they just targeted a specific amount of debt to buy, and then they just let interest rates do whatever. Now they bought a lot, and so that pushed interest rates down, but they weren't targeting a specific interest rate. This time they'll have to be more aggressive by actually targeting a specific interest rate, and so that'll be yield curve control. There's a difference between buying $120 billion worth of debt every month and then letting interest rates do whatever they are going to do after that versus targeting a specific interest rate. That means you have to buy as much or as little of the debt as necessary in order to get interest rates down to that level. So they'll target, let's say, 2% or 1% across the yield curve. That'll bring mortgage rates down. They'll peg mortgage rates at 2% or 1% all the way to the 30-year treasury. They'll buy corporate debt. But again, that's just a little bit of a step beyond. That won't be enough. They always have to do one more thing. And in my opinion, it's going to be buying stocks, because it won't be enough to stop the bankruptcies by just stopping the price of the debt from moving. Equity markets are going to start to collapse. And if equity markets start to collapse, then you still have the risk of the economic implosion that you are trying to stop. And so the Federal Reserve will have to step in and buy stocks. They'll have a new special purpose vehicle at the Treasury that they will print money and give to the Treasury, so the Treasury can go buy ETFs like SPY, the S&P 500 ETF, the Dow, the Russell 2000. They're going to start buying stocks. And this will stop the stock market from collapsing, from falling, and this is the point at which to sell. All right, so I was just editing this video and I realized I forgot to mention one of the key reasons why I think the Federal Reserve will start buying stocks. And it has to do with the Federal Reserve wanting to give corporations the ability to service their debt. So we all know by now that the federal government owes a lot of debt, right? They've got a lot of debt, and their debt service costs are growing as interest rates go up, and for all of the debt that they have to roll over. Every time they have to get new debt to pay off that old debt, the interest rate is higher than it was before when interest rates are going up. Now, any debt that is owned by the Federal Reserve is essentially interest-free for the government, because all of the interest payments are profit to the Federal Reserve. Essentially what they do with that after they pay their nominal expenses compared to how much they make in profit on that debt is just swept back to the Treasury. So if the Federal Reserve were to own 100% of the national debt, that national debt would essentially be a zero interest rate for the federal government. They would pay that debt off, pay whatever interest rate was stated on it, 5%, 10%, whatever, and then the Federal Reserve would just sweep those profits, that interest, right back to the Treasury. So it essentially have a net result of having a 0% interest rate. So as the Federal Reserve buys more government debt, the interest rate on that government debt becomes less and less relevant, just an accounting thing. It doesn't really show up as a cost for the government. It's not true of corporate debt, though. The Federal Reserve can purchase a bunch of corporate debt in order to keep the price of that debt high. But if the corporations are having an issue with being able to service that debt, you still have a problem. The Federal Reserve doesn't have a mechanism to inject cash directly onto the balance sheets of corporations like they do with the government in order to help them out with paying their debt as they rolled over at higher interest rates, or maybe they're insolvent, maybe during a crash they just can't get enough cash flow. And so one mechanism that would be available here is if the Federal Reserve steps in and starts buying stocks through ETFs like SPY held at the Treasury, then the Federal Reserve is buying shares. Now, in a normal environment like right now, if a company decides to do a stock split, there's no effect on anybody, right? They do a 2-for-1 stock split. You go from owning 100 shares to 200 shares. They were worth $10 a share. Now they're worth $5 a share. Everybody has the exact same percentage ownership of that company as before. Nothing changed. But a company can issue new shares and then sell them onto the open market to raise cash for themselves. That is an option as well. All things being equal, if they issue a bunch of new shares, that would push the price down because you have more sellers now, more selling pressure, and the same amount of buyers. So if a company wants to raise cash and doesn't want to have to deal with their stock price getting pushed down, they have to drum up new investors and get new investors to come in and buy up all those additional shares. So they need extra buyers to come in to buy up all those new shares that are being issued so that it keeps the price of the stock high. This is the role that the Federal Reserve could play. They could come in, they would be buying a bunch of shares of stocks through something like SPY or other ETFs. And they'd be buying these shares of stocks that the corporations are issuing. The corporations would be able to issue, theoretically, an unlimited amount of new shares in order to service their debt costs and pay their employees, do whatever they want with that new cash. And so this would be a mechanism by which the Federal Reserve could fund corporate America to be able to service its debt and continue paying the bills by buying the equity, and the companies would be able to issue as much debt as possible, which means that eventually it's possible that close to 100% of the ownership of these companies goes to the Federal Reserve or the federal government through the ownership of these shares. And the final reason why I think they're going to start buying stocks is to save 401ks and pensions, because we all know that bonds are basically maxed out. Right now, they've fallen a little bit. Yields have gone up. When the Federal Reserve comes in and starts buying up bonds again in the next round of QE, when the crash starts, it's going to push interest rates down to close to zero for all bonds again. But that's not going to be enough to save the total value of all the pensions and all the 401ks and all of the trust funds that all of the money by all these massive institutions has in the stock market. Because if this 60%, 60-40 portfolio that everybody is in, if the 40%, which is bonds, stays at full value because the Federal Reserve is buying bonds, but the 60% starts crashing and crashes 20%, 30%, 50%, 80%, it's going to cause so much economic pain, not only for the bankruptcy of the corporations that are the lobbyists and they fund and they line the politicians' pockets, but also the voters and the people. And that is when the majority of people start to see, hey, the people who are in power don't have our backs. Then you get civil unrest, you get riots, you get revolutions. And so the people in power will look at this and say, hey, it's better to just buy stocks to keep the values of the 401ks and the pensions and the trust funds all at full value, so that you don't get that massive societal breakdown, societal collapse. And so they will likely do this in order to save the pensions and save the trust funds and the 401ks to prevent or stave off any of that collapse as long as possible. It won't work. It'll eventually result in complete, utter collapse later on. We'll see what happens, though. I do think in this next crash, they'll start to do that. I hope they don't. The reason why you sell at this point has to do with a couple of things. Number one, when we look back at history, any time this starts to happen, what you're actually seeing is a nationalization of the entire economy. This is the government then stepping in and taking an ownership stake in the economy, in the production of resources, the production of wealth. Actual ownership and actual control. Right now, there's a crony zombie Frankenstein-like relationship happening right now between the market, which is not a free market in America anymore, and the government. This represents a complete merging of the two, which is a very dumbed down definition of fascism is government control. State control over the economy. Communism is state ownership over the economy. And so it's moving from more of a fascist system that we have right now into more of a communist system by actually nationalizing and having the government purchase an ownership stake in the economy to nationalize these industries. This is not something we want to be a part of. When we saw a great example of this is the Mississippi bubble in France 300 years ago. John Law was the one that created their central bank. He took over, he pulled the gold and silver out of circulation, got people to use paper currency. He backed up that paper currency with a little bit of gold, a little bit of silver, and shares of the Mississippi Company, which owned land in America. And in order to keep the value of the currency high, he needed to make sure that the value of those shares of the Mississippi Company were high. So eventually he got into this feedback loop where he had to print money and then use that new money to purchase shares of the Mississippi Company to keep the share prices high, because that kept the value of the dollar, the currency high. But he was having to print money in order to do that. And so very similar to today, where they have to print money in order to buy U.S. government debt, because the U.S. government debt is the thing that's the foundation of the global financial system that gives the dollar its value. It's a feedback loop. They're going to have to do that with stocks. And as soon as John Law started to do this, all the smart people looked at this and said, this is unsustainable. And now the prices of the Mississippi Company are high compared to what they would be absent the intervention. So they started to sell and sell and sell and sell. Well, all that new selling pressure meant John Law had to print ever more money in order to purchase all the shares that were being sold so that the price didn't crash, and eventually resulted in just a complete nationalization, ownership of that company, and hyperinflation and a collapse of the financial system. Not something you want to be a part of. As soon as they start to buy stocks, that is the point at which to sell and say, I don't want any part of this. I don't want to be co-owners with the federal government of these massive corporations. Don't want any part of that, regardless of what the price does. The price may go up. They may buy enough in order to push the price really, really high. Personally, I don't want any part of that. I'm not going to be co-owners with the federal government in these corporations that are now zombie-owned corporations by the federal government, Frankenstein monster, communist, nationalization and federal government ownership of industries and the economy. It will result in hyperinflation eventually, and it will result in a total financial collapse if this is the route that they decide to go down. I really hope they don't, but if you look at the last couple of decades, every single time they have to increase their intervention, it does look like at some point they're going to do this. I hope they look at this and say, hey, we should step back and take a free market approach and just let the bad companies go out of business, let everything collapse, and then we can rebuild from a strong foundation after all of the dead wood is burned out of the system. I don't think they'll let it happen, though, and I do think they'll start buying stocks, which in my opinion is the signal to get out. Hope that helps. As always, really appreciate you guys. Thank you so much for watching. Have a great day.